Hi guys, I'm Pavelko from FxPro. We continue our series of educational videos on the theory and practice of trading. And today we have a very pressing and critical topic that will be relevant to absolutely every single trader out there, because each of you has personally faced, is currently facing, or will definitely face a situation where it seems to you that your strategy isn't working at all. Or perhaps it's just not working nearly as well as it used to in the past. And in today's video, we will talk about how to recognize this in advance and under what conditions it becomes absolutely clear that your trading system needs certain adjustments. We will discuss what to do if you realize that some things in your trading system are not working as they used to. And of course, most importantly, we will figure out why this happens. Perhaps this information will help you improve your trading system in terms of its stability. Today, I will focus on the single most fundamental and critical element that causes trading systems to stop working. So undoubtedly, markets do not remain the same as they once were. Whether it was a year, 2 years, 3, 5, or 10 years ago, the market constantly changes. Of course, there is a category of traders who believe that the market is always the same, that at the core of the market naturally lies certain human emotions. These are fear and greed, and so on and so forth. Yes, human behavior does not change, but the market itself is subject to change. Why? Because first of all, the news background changes. Secondly, the market volume changes significantly. And thirdly, the composition of participants changes. That is, we know that there is currently a very high percentage of algorithmic trading in the market, meaning automated trading. And to say that the market today in 2026 or 2027 is the same as it was, for example, in 1995 is madness. So remember that the market changes. And naturally, trading strategies that worked yesterday and worked quite well may no longer work. But one of the simplest reasons is, there are many traders who made money, for example, on a wildly growing stock market. In the US in the 1980s and 1990s, when the market just kept rising for years, just look at the S&P 500 index chart and you'll see it went up for decades, an upward trend. And back then, there really were simple trading systems, bouncing off moving averages, buying with the trend, and that was it. But when the market started to fall or entered a sideways channel, all those systems broke down. We'll also talk about this today. That's why we need to understand that this illusion of permanence is truly just an illusion. In other words, that's not what the market really is, because first of all, it changes. Market phase. We know that market movement occurs in phases. These are trends and corrections. And these trends as well, if we're talking, for example, about large time frames, weekly or monthly charts, there are huge flat periods that can last for many years. And that's why a change in such a phase can also lead to your trading strategy no longer working as it did before. Naturally, volatility changes and naturally liquidity changes as well. So all of these concepts are subject to change. Let's talk about what's happening in Russia. That very specific moment when you should already be on a state of high alert. There is actually a perfectly descriptive term for this. Subtle changes. These are what we might call soft signals, so to speak, that when they finally appear, you can really start asking yourself certain important questions. The first sign is that your typical trading setups appear much less frequently than they did before. And then you might notice there's a slightly higher percentage of stop losses being hit. That is to say, when you start trading seriously, you should have a certain statistical set of performance metrics for your specific trading system. Well, what I'm doing here is showing you exactly how it should be done correctly. So you understand what your average percentage of profitable trades is, for example? It's one value during a trend and another during a flat market. And if these metrics start to deteriorate a bit, that's a sign you should start thinking about it. And of course, this specific performance metric, essentially the profit factor, which is the risk to reward ratio, also starts to worsen. That's also a clear sign that you might be facing some potential problems. Yes, your strategy is still working, meaning it's functional, but it might be working less effectively. This is very important. It's very important. Moving forward to the next point. Let us consider under exactly what specific conditions do you really need to start the process of implementing these certain changes. First of all, it is a consistent and systematic drawdown. A systematic drawdown that is clearly larger than the drawdowns you experienced before. In other words, you realize that your trading system is reading the market differently, meaning it's not as effective as it used to be. Next, the overall profitability of your trading setup starts to decline quite significantly. For example, previously your percentage of profitable trades was, say, 55%, but now it's dropped to 38. Yes, you realize that something is wrong, and naturally, if you already start to doubt yourself based on all these signals, or perhaps you experience a compelling urge to rewrite or add new elements to your fundamental trading system. This, of course, is your natural and understandable personal response to the clear fact that certain elements of your approach require a significant change. This is a very important point. Why do trading strategies stop working? Naturally, this is a question that troubles many traders. And one of the primary reasons, and I think the most important reason, is that your current trading system is based on some single thing, which is essentially a particular market inefficiency that you are actively exploiting, but the market can always change. And, for example, you notice that the shares of a certain company or the price of gold, when they fall or rise in a certain way, they behave in a similar manner, and you have identified this tendency. This tendency really can repeat itself for a certain period of time. But then comes a time when the market changes and it starts to either grow rapidly or fall. Take a look, for example, at the crazy trend in metals in 2025, when the price of silver increased several times over, if I remember correctly, by 3 or 3.5 times. And believe me, many systems, such as those based on bouncing off levels, simply failed at that moment. So, the primary and most fundamental reason why various financial trading strategies stop working over the long term is that they are based on a single specific market pattern that simply stops being effective as the overall market landscape shifts. For example, there was a crazy trend and your trading system is trend following. Let's say you just trade on bounces from moving averages, but then you suddenly enter a prolonged sideways market. And this sideways market can last for months. In some cases, it can last for years. So what does that lead to? It leads to the fact that your trading strategy will most likely stop working. For example, you were operating in low volatility conditions and then suddenly there was a surge in volatility, or vice versa. In other words, the input data and conditions under which your system worked have changed dramatically. For example, previously you had a clear, let's say, wave structure. Yes, for instance, followers of wave analysis will understand me. There are markets that are hard to read using waves, or really where the movement is so choppy and erratic. For example, scalpers refer to this concept as market smoothness, meaning how smoothly the market moves. There are markets that move smoothly, and there are markets that are better not to trade at all. Now imagine that the market was smooth, and then it stopped being smooth, and essentially the working conditions changed. It is therefore crucial to keep in mind that, in the vast majority of cases, trading strategies are carefully developed to take advantage of some specific phenomenon, which can vanish from the market. Therefore, keep in mind that in this case, you will immediately notice a decline in your own results. If you start to feel that something is wrong, then indeed something is wrong. What do professionals do in such a case? Let's take a look, because this is truly a problem that anyone can encounter. I sincerely hope you never have to face this, but nevertheless. First of all, don't panic. That is, you need to understand that, yes, the conditions underlying your trading system are not really working as well anymore. Next, pause trading or reduce your trading volume. Why? Because there is no point in trading with the same volumes under conditions of uncertainty. Analyze all your past trades in detail. Why and how did they fail to work? So try to understand what is happening in the market right now. As I mentioned before, is it a trend or a flat market? And so it is important to try to understand and accept for yourself that sometimes you just need to take a much needed break for a certain period of time. This is truly the best possible decision you can make. So remember, a trading system is not just a set of rules that never changes. In other words, it's actually a living organism, because the market itself is a living organism. It is capable of changing. And at some point, it may also lead you to actually have to change your set of certain rules or filters, entry or exit systems. Well, friends, that's all for today. I hope it was clear to you why trading strategies stop working. I gave you specific recommendations on what to do in such cases. Thank you for watching this video to the end. We'll see you in the next episode.